invest in the S&P 500, probably the most common investment advice. And it's attractive because you get exposure to the top 500 US companies in a single fund without stress, no research, and the S&P has produced an annualized average return of around 10% over the past 66 years. Now, as I was looking through the stocks in the S&P, I noticed something interesting. Just 5 companies, which is only about 1% of the bunch, make up around 23% of the portfolio. And those same companies just so happen to have the most visited websites in the world based on Google traffic. Now, I don't know if it was the 3 sips of non-alcoholic beer talking, but I couldn't help but wonder, what if we threw together a portfolio from the top 100 websites with the most Google traffic? What would that even look like? What kind of return would it have produced over the past 5 years, 2 years, or even just the last 6 months? And how would my custom portfolio of Google traffic stocks compare against some of the most popular assets in the world, like the coveted S&P 500? I went on a mission to find out if using Google search data this way could beat the S&P 500, and after diving into the data, let's just say my jaw hit the floor. Now, before we continue, a few quick disclaimers. This is not investment advice. My numbers haven't been audited, and the nature in which I pick these stocks is speculative. This is not a correlation study. Seek advice from a financial professional to understand the associated risks. Now, let's dig into the numbers, starting with our 5-year investment timeframe. To give you a decent benchmark of how my Google traffic stocks portfolio would have performed, we need to compare them to other popular assets like these ones. And over the same time period, it looks like most of these had a pretty solid run, with the S&P 500 giving you a return of almost 80%, turning $1,000 into $1,800 passively in less than 5 years. Sign me up. Now, where do you think our website stocks fit in here? Well, in total, 16 of the 100 websites made it into our Google traffic stocks portfolio. And these are all household names like Amazon, Apple, Facebook, Netflix, and lots of big US companies. And had I invested $1,000 split evenly amongst our 16 Google traffic portfolio stocks around 5 years ago, it'd be worth $1,867.94 for a return of 86.79%, beating the returns from the S&P 500 by around 7%. That's right, it was the 3rd best performing asset from our list. Crazy, right? Now, of the 16 stocks in our web traffic portfolio, Apple was by far the best performing stock, with an over 250% gain over the 5-year period. And looking at Apple's organic traffic over time, it's clear that they prioritized organic traffic growth starting from around March 2019, roughly the same time we hypothetically bought this stock. And if we reverse engineer exactly where this growth in traffic came from, you'll learn that they created their apps.apple.com subdomain in 2019, which sends them a cool 150 million monthly visits today, which, by the way, is roughly 33% of Apple's total organic traffic, according to Ahrefs Site Explorer. And they pulled this off by ranking for well-known company names in popular apps. Now, because tons of people search for these names every month, they're managing to snag a healthy chunk of that search traffic, which I'm sure leads to more app downloads. And coincidentally, as organic traffic to the App Store took off, payments to Apple's app developers accelerated too. And basically, as app developers rake in more cash, so too does Apple. Now, on top of their App Store success, Apple expanded globally, opening an online store in India in September 2020. And this move skyrocketed local organic traffic in India. And since most of these searches are for Apple products, one might guess that the traffic was buyer-focused, giving us a peek into the demand for Apple goods in India. Oh, and by the way, Apple's revenue in India grew 42% year-on-year in 2023. Now, the company with the biggest loss in our 5-year Google traffic stocks portfolio was TripAdvisor, that lost a total of around 37.5% of its stock value. Now, TripAdvisor's organic traffic has also grown by a bit since 2019, although mostly range-bound. But what's fascinating to me is that brand searches for TripAdvisor dropped dramatically from roughly 1.4 million searches in June 2019 to now just 443,000 searches. That's a huge loss in branded searches. Now, I'm not saying that there's a direct correlation with stock performance and any of these observations, but I just thought that these were super interesting things. Onwards to the 2-year time frame. So just like with a 5-year portfolio, the 2-year Google stocks portfolio had 16 companies, and not to my surprise, 12 of them were actually the same from 2019. And because these companies have overall performed pretty well, our 2-year Google traffic stocks portfolio returned a massive 42%, just behind the Nasdaq 100 and around 12% ahead of the S&P 500. Now, the biggest winner in our portfolio by far was Meta, with a 186% gain. And let me remind you that Meta owns Facebook, Instagram, and WhatsApp, which are 3 of today's most visited websites in the world, generating around 3.5 billion visits from Google search alone. And it's quite clear that Meta has been making moves in organic search, with Facebook 2.5xing their organic traffic to over 1 billion monthly visits. Instagram jumping from 740 million to around 1.3 billion monthly organic visits, and WhatsApp increasing by just 70 million. Just 70 million. And the biggest loss in our portfolio was from Etsy, which lost roughly 28% of its stock value. And this brings us to our final time frame, which was from October 1st, 2023, so around 6 months ago. So out of the top 100 websites, we found 20 companies that are publicly traded in the US markets. Now, had we invested an even amount into each of these stocks, we would be up 25.63% over just a 6-month period, which beats every asset except Bitcoin. Now, the biggest winner here was Spotify with a near 67% gain, and the biggest loss was from Yelp at around -6%. Now, considering 92% of active large cap fund managers, aka professional investors, underperformed the S&P 500, it was pretty shocking to see that our free list of top 100 websites by Google traffic could beat the S&P on all 3 randomly chosen timeframes. So that begs the question, would I pick stocks by using a list of top 100 websites based on Google traffic? Not a chance. There's way too many things that impact movement in stock prices, and website traffic probably isn't one of those things. Now, for the average investor who's dollar cost averaging into total market ETFs, good on you. I think it makes a lot of sense for the reasons I said before. But for those that are going with a more bespoke approach to stock investing, I do think that web data can provide interesting insights as one of many layers in your due diligence. Website and search data just give us clues into where attention and demand are flowing, which is so important in today's digital age. And even for assets that don't have a single dedicated website like Bitcoin, we can see from search volume trends that there's clearly consistent and growing attention flowing there. Or if we combine the organic metrics to 5 of the most popular crypto exchanges, you'll see that there's been rapid interest and growth in the industry. And again, while there probably isn't a direct correlation between organic traffic and stock price, the one thing that is clear is that the biggest digital companies in the world highly value organic search as a traffic source, because once you're ranking, traffic is free, consistent, and it doesn't fade over time. Now, if you want to learn how search can work for your website or business, take our free SEO course where you'll learn how to get organic traffic to your site, even if you're a complete beginner.